part of the project, which is all about the outgoing payments, is that it's suddenly you're getting information on things on which you had no information before. So payments, international payments used to be a black hole. You used to send payments into the ether and hope for the best. So these days are gone. Now the corporates can get from all of their banks in a consistent fashion straight into their systems. So in a fully automated fashion, they can get information about the status of these payments.
That's Marc Delbaere, Global Head of Corporates and Trade at Swift, talking about the very usable power of GPI for corporates. Hello, I'm Tom Alford from Treasury Today Group Editorial, and welcome to this Treasury Today Group podcast. In this episode, we'll be exploring the latest Treasury-specific developments of Swift's Global Payments Initiative GPI and its corporate-specific incarnation GPI for Corporates, or GPI 4C. To get to the heart of the matter, I'm joined by Eric Bayle, Director, Head of Global Transaction Banking UK, Societe Generale, and Marc Delbaere, Global Head of Corporates and Trade at Swift. With Swift mandating universal confirmations for all banks in November 2020, greater GPI adoption is anticipated. With this in mind, we'll be taking a look at where GPI 4C is now and where it goes next. On the way, we'll be tackling some of the big questions that treasurers have about the real-time tracking and tracing of their payments. Before we dive into the detail, let's hear from Swift's Marc Delbaere, who can give us a quick update on the GPI story so far.
So the first part of the GPI for corporate service, which is called Pay and Trace, went live indeed in middle of last year, in 2019. It really hit the floor running, because we got all of the early adopters that had pushed the value of the solution to their banks and vendors. So we got very, very quickly from the onset a strong community effect for the early adopters, because the corporates are really the ones that are leading the charge. So the corporates have the need, and the dynamics that we're seeing is that the corporates are pushing the banks to get the service available to them, and are requiring enablement from their vendors. So the TMS vendors, the treasury management systems, have a very important role to play, because these are the ones that are providing the experience to the end corporate. So we're very, very happy with the initial pickup, and we're seeing every day new subscribers on the corporate front, on the banking front, and new vendors enabling it.
Of course, GPI 4C adds an exciting new twist to the existing model, as Marc explains.
The GPI for Corporates programs is about automation for multi-bank corporates, right? So GPI as a program in general has been providing value to corporates, way before we launched GPI for Corporates, because the way it works is that the banks now have more information about these international payments and can provide this information through their own channels. So banks have been doing that for quite some time now, by integrating GPI value into, for example, the e-banking portals or their own channels. But GPI for corporates is really about being able, for corporates that are dealing with multiple banks internationally, to get all of this information in one single place, straight into their treasury system. So that has been really the defining factor.
With that uptick in activity, I asked Marc what sort of feedback Swift is seeing from GPI participants.
So the feedback we're getting on this first part of the project, which is all about the outgoing payments, is that it's suddenly you're getting information on things on which you had no information before. So payments, international payments used to be a black hole. You used to send payments into the ether and hope for the best. So these days are gone. Now the corporates can get from all of their banks in a consistent fashion straight into their systems. So in a fully automated fashion, they can get information about the status of these payments. So if there is something that goes wrong, they can then take action. And of course, if everything goes right, then they can take it off their to-do list and be happy with that. So the visibility that corporates are getting on these outgoing international payments is new, and is something which is very, very much appreciated if you are routinely sending large international payments to either your subsidiaries within your groups, or to your providers, or or counterparties. First part of the program, which is now live, has been live for about 6 months, is all about the outgoing payments, and now we're working on the incoming payments, so which is the next big phase of the program. So this is progressing very, very well. There is even more appetite for the incoming payments than for the outgoing payment status. The reason is that, of course, people prefer to receive money than to send money. And in particular, you're able, when you have more visibility on incoming payments, to have a better forecast for your cash, so you can see when payments are going to come. And in case there is a problem, again, you can take corrective action early and fix it by talking to your correspondent.
Now, the real goal for the banking community is to onboard as many corporate clients as it can. Societe Generale, or SocGen, has been part of the GPI story since the beginning. Eric Bayle updated me on how the bank is progressing the case for GPI 4C. First, he talks about uptake before explaining SocGen's current GPI offer.
At the moment, we have 12 countries that are live. Russia went live in November 2019. In 2020, we scheduled to have EGI New York, Luxembourg, Romania, and Czech Republic going live. As for Africa, well, this is where we go on the back of a universal confirmation. It is at the moment being studied. It is obviously a strength for us, Africa, but we need to study what we are going to do. So EGI at the moment has more than 200 currency corridors live on GPI. In 2019, we went live on the reporting through host-to-host. So this is for large and mid caps, and the channels are FTP, SFTP, SwiftNet, EBIX. And the idea is that we send a PSR GPI, PSR, Payment Status Report, specifically with the GPI information. All the data of the tracker is in the PSR under standard specifications, which makes it a multi-bank offer, meaning that whatever their bank, the customers are going to receive the same information in the same format. EGI was one of the first banks to offer this. So the next step now is that we expect the same push on the vendor side to develop the interface for corporates to be able to integrate automatically and, with a standard specification the PSR that we are going to send them.
The banks are keen to maintain momentum, and SocGen is pressing ahead. Here's Eric again on the bank's plan for 2020.
In 2020, we are going to develop the reporting on the web banking portal called Global Cash. So basically, there's a follow-up payment page. Within this page, there's going to be a GPI tab. When the customer clicks on it, it will open a window with a GPI tracker. We are at the moment finalizing the screenshot, so I'm confident that it's going to come out very soon. Both reporting may be host-to-host or web banking or real-time.
The teams from SWIFT, the banks, the corporates and the vendors who've been working on GPI all know they have a winner, and they all appear keen to be pushing the usability and scope of GPI 4C. I wanted to know what's coming next. First, here's Eric highlighting SocGen's development pipeline.
Well, for the future, the big thing is the Swift release. We already talked about it. The second thing in terms of offer is the tracker for beneficiaries, meaning that our customer will have the ability to send an hyperlink with a tracker to the beneficiaries of their payments. It means that the beneficiaries, even if they are not customer of EGI, will be able to track in real time the payments due to them. Here we are really into the Amazon, DHL tracking system. The second thing is inbound tracking. So this is part of the G4C initiative. So the first stream was pay and trace, that was last year. The second stream is called inbound tracking. At the moment, it's a proof of concept. So the idea is that our clients, so the client of EGI, will be able to track all the information on their payments that are due for them in the system.
And now over to Marc at Swift.
So as part of GPI for corporates in particular, we are really focusing on automation of the information about these international payments, right? We're doing that for outgoing payments, as I've said. We're doing that for incoming payments now, which is what we're currently working on, again, in a co-creation mode. We are working on different connectivity solutions. So we are expanding the service to also work with APIs on top of messages, which makes it easier to integrate this kind of payment status in all kinds of different business processes. So it makes it less tied to a specific execution of payments, but gives you more decoupling, if you want, from your information systems.
With the advent of APIs in the corporate banking sector, I asked Eric to elaborate on their value in GPI 4C terms.
Banks are working to be able to deposit the GPI information onto their API portal so that any vendor can come, retrieve the GPI information from all the banks and deliver it in a standard format with standard specification to their customer. This is really going to make the offer multi-bank. So the vendor will centralize the GPI request and the delivery will become completely bank agnostic. It will be simpler for customer, but we wait for vendors to deliver.
The core GPI program is also the subject of continued improvement, as Marc explains.
We are pushing the envelope quite a fair bit in terms of something called prevalidation, which is all about providing, before you sending the payment, more information about successful execution of that payment by, for example, checking with the beneficiary bank that the account can be credited, that you have the right name for the account owner, checking that you have all of the right data requirements filled in for sending payments to specific countries. So making sure you have the right corporate number, if you want to send a payment to Russia, or a purpose code, or all of this information is really what we're looking at from a pre-validation point of view. And the goal is very simple. It's really to get out of the way anything that can go wrong before you push the button to send the payment.
With several diverse groups involved in the programme, I wanted to know if progress had ever been subject to different end goals. With Swift in the chair, Marc says not.
Whether you talk to banks or to corporates, you're getting pretty much the same type of answer. So banks are not going to do work, if it doesn't benefit their end customers, right? So all of the discussions we had with banks is about being able to provide a better level of service to their customers. If you're looking at areas, where customers or corporates are asking for better service or for more, so anything that has to do with visibility on what's going on is very important. Increasing your chances of STP is very important as well. So if you can make sure that payments don't get rejected at the end of the chain, that has a lot of value for corporates. We have features like the ability to stop a payment if you've made a payment, for example, incorrectly. That's something we've provided to banks initially, but then banks are trying to push that into the channels as well. Same thing, if you're a corporate, you've done a payment incorrectly. I was talking to a large Swiss corporate, a couple of weeks ago. They had made an important payment to Singapore in Swiss francs by mistake. Fortunately, they saw it fast enough and they could correct it. But if you don't, the amount of FX fees that you might have on a payment like that, might really be quite significant. So the ability to stop things like that would be quite useful. More importantly, again, on the corporate front, there is a lot of appetite to find better solutions to combat fraud, in particular supply fraud. So making sure that nobody has hacked into your supply database and is getting you to send money through all kind of social engineering maneuvers to the wrong account. So anything that we can do centrally by working with our banking community to provide more certainty that everything is legit is very, very in demand from a corporate point of view, and of course for the banks that serve them.
As with every good idea, competition will surface, and in GPI's case, Ripple's blockchain solution springs to mind. Swift's view of the race to be the solution of choice is understandably optimistic.
Of course, there is always competition. The edge that we have in this area is that we have an incredible reach with the Swift network, right? So if you want to design a good customer experience top down in a lab, it's pretty easy, right? So because payments fundamentally are not something very, very hard. It's getting hard when you need to go through all of the details of the execution and the local regulations and the compliant aspects and all of that. That's getting harder. But being able to transfer money from one point to another, if you look at it from a very conceptual point of view, is not very hard. If you want to be able to do that across the whole industry, then of course your theoretical models about how things might work are getting challenged in terms of adoption, in terms of support by regulators, in terms of support on the ground by actors that are able to execute things, right? So I think that where we can make the biggest difference with GPI and the approach overall has always been about how can we do things at scale. How can we provide a new discipline, if you want, for the financial services industry to collaboratively provide a high level of service to their customers. That's really what we stand behind. So what GPI has all been about has been about identifying bad market practices. One issue is the modification of remittance information. So if a bank across the chain is starting to use a remittance information field to fill in some bank-specific instructions because that's convenient for processing, that has a net effect of disrupting the reconciliation processes on the corporate side. Right? So that's really bad from an end customer point of view. So that's part of the core SLA of GPI. You shall not, modify remittance information if you want. And of course, we love that there are all kinds of new entrants coming up and challenging the banking industry, because this is what's giving energy and incentives for the banking industry to actually go through these transformation programs. So that's what we're seeing on the competition front.
It's a rare thing in a cut and thrust world of business to achieve something truly collaborative. The GPI has seen banks, Swift, technology vendors and corporates all pulling in the same direction. Could GPI foresee be a model for future cooperation? Here's Eric.
Absolutely. Banks have had a tendency in the past to develop products and solutions in vitro without acid testing the project with their customers to ensure it was meeting their needs. As resources are scarce, customer needs are evolving more and more towards retail needs. They want anywhere, anytime, speed, reliability, user-friendly. Banks have to develop solutions in an agile mode. That's exactly what happened with GPI, and that's what made a success. We work together with Swift, with banks, and with corporates, and with vendors to make it a success. This explains the deployment.
Having seen GPI become its most successful product to emerge in many years, is Swift in the mood for more collaboration? For Marc, yes, but with some exceptions.
It really depends on what you're trying to achieve. If you want to provide a large-scale transformation, of the whole industry, there are not that many ways in which you can go after that, right? So if you want to provide a product on your corner of the world in isolation and so on, there probably less need for having this overall collaborative approach. I do believe that when you're looking at the challenges that are facing the industry today, a lot of these challenges are very fundamental in nature and require collaboration and require new ways of working to be able to overcome them. So if you're looking at that from a change management point of view, of course, you need to work with all of the players as early as possible in the cycle, making sure that everybody is clear about the intent. Does it make sense? Is that a desirable outcome? Will I be better off, if this thing succeeds? and you need to get the whole chain with you, because anyone not pushing with you will push against you, right? And if you want to be able to do this sort of large scale transformations, you absolutely need to be continuously in sync with all of these market actors to be able to do this kind of collaborative innovation.
So that was Marc Delbaere, Global Head of Corporates and Trade at Swift, wrapping up this look at GPI 4C and the development of real-time track and trace payments for corporates. My thanks to our guests, Eric Bayle, Director, Head of Global Transaction Banking UK, Societe Generale, and of course Marc Delbaere, Global Head of Corporates and Trade at Swift. I'm Tom Alford, thank you for listening. I hope you've enjoyed this Treasury Today Group podcast. You can hear more of our podcasts and read in depth about the issues we've spoken about on our website, treasurytoday.com, and through your preferred social media platform.